May pips be upon you. Let me start this video off by talking about GJ and the trade that I missed. I failed my subscribers, got distracted with gold and Dow, and I missed the entry. I'm hoping that some of you caught it, but I'm going to use this as a teaching moment because there's a lot of good stuff inside this missed trade. Again, my apologies. I missed this trade. The actual entry happened during my sleep, but we'll go over that right now. Okay. Now, this is the last image that I left you with in the prior video. Please refer to that video, the pound yen trade idea I put out on the 11th. And oh man, I'm sad that I missed this trade because it was a good one. And you're like looking at this and you're going, where was the good trade? Here? What? All right. No, let me tell you why. Check this out. The if we use the replay tool, we're going to go to where I left off at the video. That was it right here. And I'll review what I said. Said we were waiting on an order block to be hit. Price was on its way up, finding strength. I said it broke these closes here. And I was like, this looks like we might break the highs. We were on our way to break these highs, but this is an order block, right? A 4-hour order block here that I highlighted. And I said, once price gets past that midpoint, the equilibrium of this order block, then there's a good chance that it might break this order block. So, but it wasn't broken yet. That's, if you remember, that's what the last thing I said. I said, but in case it does, price will only go to the next order block, which is up here, another 4-hour order block, which I have, illustrated here, right? And again, we go to the midpoint of this block, actually the midpoint of this institutional candle, and I have the equilibrium line right there, right? So that's what I was waiting on. I was waiting for price to hit up here, and either here and turn, or here and turn. And I was like, hey, if it goes up here, I'll just not have that upside down. I would just go up here, put my what do you call my stop loss above the the zone here, and I had picked a target way down here, looking over here to the left. I was like, oh yeah, well that looks like a good area to target these lows here. You know what I mean? And or whatever, right? But here's the part that you can learn from. All right, I looked at the 4-hour. All right, I got these order blocks here, but the whole name of this game is to get the best risk to reward. Right now, my stop loss is 37 pips. A lot of people say that's very reasonable if you're going for a 12-hour doggone trade. Let's just say we're just targeting just these lows here. All right, that would still be a 8-hour trade. That can make most people's month, let alone a day or a week. Just to get an eightfold return on investment, right? But there's something I want you to learn. All right, these are the order blocks that we see. The name of this game is top-down analysis, and I started with the monthly, and I went all the way down to a 4-hour execution for a swing trade. Now, for a swing trade, this is where you want to be. All right. You want to this is a good place to take a trade. This is an excellent risk to reward here. 37 pips to make 300 pips. This is a great setup, right? Let's go further. Let's go to the 1-hour. And what do we see? Another doggone order block. All right. So when you're looking at these setups, you want to make sure you have your bases covered. This is a very strong order block. Not as strong as the 4 hour, but way stronger than anything lower in the lower time frames. All right. 1 hour is a good strong order block. So I'm gonna mark that out. All right. And keep it in mind. All right. If price breaks this order block, this is the next one I would expect or look for price to reverse. You understand? It's that simple. Now, I also want to get a midline in there, like so. Look for the center, right? And give put a little line there. That's all. All right. When price hits that, usually when price usually hits that midpoint and then turns around. It'll hit the beginning of the order block or the midpoint, and then reverse. Okay. Now, what we want to do now is advance the time, and we'll see if price breaks this order block. Now, see, right now, I would say, oh man, did I blow it? I'm in. I should have been in this. I should have been in this because we just created another order block here. All right. This is why it's highlighted. All right. But until I break below the I wouldn't want to take a trade, a short into this. All right. I just wouldn't want to take that trade. This is a bullish, bearish, bullish order block. All right. So I don't want to take a trade into that because then there's a danger of it breaking past it. You know what I mean? I would be very nervous on that. So I'm looking for confirmation. If price comes back up into that order block and then rejects again with another bearish order block that is respected, then then I'll enter on confirmation. Let's advance. See, we're finding a little problem here. All right, so I'm looking for a confirmation here, and on the second try down, I'm pretty sure we'll get through this with some volume. All right, here we go. Let's go. Oh, look at that! It pops right through it, just rams right through it. This is this is a weak order block in comparison to what sent price up here. All right. Well, would we see this order block on a higher time frame? You bet we would. And those are stronger. This is the delicate balance the dance that we play here, right? And you make note of little things like, all right, we might have a inverted, excuse me, inverted head and shoulders here. You know, that could be something. All right. But the main thing is we've come back up to the top of this order block. I'm thinking for sure, after breaking this one, hold on, after breaking this one here, for sure, we're going to break this order block. So I should have been looking at this next order block, but I was waiting for this one. I didn't mark this one out, and this is my mistake. I apologize to my subscribers. All right, this is my mistake because look what time it is now. For me, it's 10 o'clock in the morning. Oh, it's 10 o'clock in the morning. I thought it was 11 o'clock in the morning. I totally missed this because I was just distracted with gold. Totally missed this. Uh, but we didn't get a confirmation. Look what time it is now. 14 o'clock. 14 o'clock. Never say that. 1400 hours. All right. And we just made a bullish and go for this. Looks like we're breaking this for sure. So this becomes irrelevant to me if I could just make it go away. All right. That order block is done. It's broke. All right. Here we go. Look what time it is now. 6 o'clock in the evening. For me, this is I live in Eastern Standard Time. Sorry, and it's 1800 hours, and we are in this order block, this hour order block. Again, I didn't scope this one out. I only went as far as the 4 hour. So You know, uh, that's what I was thinking. And by the time we hit the midline, I wasn't paying attention to it. It's 10 o'clock now. All right. At this time, I'm preparing for bed. I'm doing a nightly routine. I'm probably in bed by this time. All right. And I did not have an alert here. I don't trade that way where I set up alerts uh, to wake me up out of my sleep. I want to trade when it's convenient to trade for me, not when it's convenient to trade for uh, you know trade. Not when it's convenient for the forex. I don't uh, you know what do you call it? Customize for forex. You know what I mean? I don't want to live life like that. I want to have it. What do you call it? Revolve around my schedule, not me about around its schedule. Okay, so here we hit this hour order block, and then we start to show exhaustion to this push to the upside. We've hit that middle point. All right. What I would look for and what I would advise you to is to look for the bearish engulfer at this point. And look, we get it. Now, this is what you do. You go down to a lower time frame. All right. From the hour, I go down to the 15. I take a look. All right. We're at this midpoint here, and I'm taking a hard look at what's going on in here. What am I looking for? I'm looking for the bearish engulfers to be respected. This one was respected. It hasn't been violated yet. We created a new one here. It's been respected. It has not been violated. We created a new one here. It's respected. We got three bearish engulfers in a row. All right. This this is there's an entry in here. All right. I want to show you what I'm talking about. All right. If we just take away a little bit of time here. All right. This is what I do. You refine it. Go down to another time frame, 5 minute. What do we see? All right. We already know we're in this 1 hour order block. All right. And it's strong, much stronger than the 5 minute, right? We already saw that we had a bearish engulfer on on the 15 minute here, and we had a bearish engulfing getting ready to form here, but we didn't see it. We didn't see it now because we come back in time. So what we're doing, we're looking for it. All right. I use trend lines in one way to look for entries. All right, we broke the trend line here. I look for 3 points of contact. Right on the third one, I'll look for a breakthrough or the fourth one, but usually around 3 or 4 taps. That's what I look for. Look for validity 1, 2, 3, and then I'm looking for a breakthrough on the fourth. Now I'm not taking this one just yet. I'm looking for a retest. Okay, I'm looking for a retest. I tend to, like I said, I like to use my trend lines, and I like to set them up in a way where it best gives me a indication that the trend is changing, even though it's a micro trend, right? So this one says, okay, looks like we're breaking the trend. We're getting a break of structure here. Uh, we got this low. We broke that low. We got this low here. We're breaking that low. All right. This is the one that is going to uh, you know, this is a break here would let me know that we're really on our way. You understand? I'm looking at this structure here. I'm looking for breaks, and I'm looking for retest of higher lows like this one, and this is the retest of it. And I'm looking for a new from that new lower high, and that low. I'm looking for this low to be broken. So I'm looking for a lower low, right? And with that that lovely pin up there. I like to look at hammers. I like to look at shooting stars, and those bearish and bullish engulfers. Those are the ones that tell me that indicate there's a reversal in a trend, right? So here we are, and we're on the 5 minute. I'm looking at, and this is where I like to enter my trades on the 5 minute and 1 minute. And with one more tick of time, we see what time it is. Look what time it is. It's 1 o'clock in the morning. I just wasn't up for this. I wake up for the New York session, right? Uh, and we can see again the the high here has been respected. This has been respected, okay, and we're about to break these lows. All right, with a very bearish candle. This is actually a Maribosa, so I like that. And as it comes past here, that's where I want to get in. All right, where look at the stop loss. All right, I put my stop loss right over here because we were already rejected from this area, so I'm pretty confident that price isn't going back up there. All right. Now you can be safer and put it here. That'll put you at 13, but I like it here at 10. I like to be under 10. That's why I like that 1 minute time frame. All right. And where are we going for a target? All right. You notice I'm putting my trade under, giving it some time to show the momentum down. All right. I don't want to just to poke down and then the next candle go up. Giving it a little. I want to catch the momentum down. Okay. And I think when it comes to targets, I'm going to go right back to the 1 hour, right? And I'm going to say, all right, we can target those lows. I'm giving you all my secret sauce now. I'm going to target these lows right here. There's been a lot of activity here as far as finding support here, resistance. This is a good place to find it, in my opinion. All right, and uh, let's go with time. That's the entry. That's where we're at. And look at the risk to reward on this. This is an 8R trade. 8R. Look at that sniper entry. 10 pips, 10 pips, point 0.8, 10.8 pips. You know what I mean? That's it's just excellent. Could we go down further to the 1 minute? We sure could, but you know, we ain't got a whole lot of time on this video. Look what we got here. Now you can manage your trade the best way you want to. You know, you can say you want to take off your risk or move your stop loss to break even at 1 to 1 or 1 to 2 or whatever. Right now, the trade is at 5.83. All right, 1 to 5.83. I mean, we're talking an excellent trade. And if we was to target these lows, we would have hit TP at 8.38. You see this rejection here? That's what we're getting here. I don't know what follows after that, but I know that that's what I would have done had I been awake. You know, I woke up to this and I was like, oh man. So I hope you gained something from this. I hope you understand the process of refinement and kind of whittling your stop loss down to your stop loss and entry and your TP down to an area where you can maximize your risk to reward. Guys, just give me a like if you like what I'm doing, if you want to support what I'm doing. All right, give a like to this video and subscribe if you want more education and more of my tips, and uh, do subscribe to the channel, man. All right, and because I like subscribers, and I'll see you in the next video.